Good morning, everyone. My name is Sriram from the Commodity and Currency Research Desk at Reliance Securities. This is the Commodity and Currency Outlook for 10th October 2022. So, we had a pretty eventful week for commodities and currencies. Crude oil prices rallied on the back of OPEC cutting production. Gold and silver also initially took support on the back of slightly weaker dollar, but strong numbers, strong jobs numbers suggest that Fed will continue to hike rates aggressively in the coming few months, and that pull the prices back lower. Base metals were lackluster as Chinese investors remained away, but Indian rupee continued to weaken on the back of aggressive rate hike policy by the Fed, which will continue to see the dollar strength and possibly going forward also push the yields higher, which dented risk appetite for the domestic rupee. So that was in brief, but we'll talk about in details. We'll start with the energy side of things. Again, oil prices remained higher on Friday as OPEC decision last week to make its largest supply cut since 2020 supported or lifted sentiments. However, concerns remained in the market that possible recession can be expected going forward, at least in the US side of things, as Fed could continue to hike aggressively going forward, supported by the recent upbeat jobs numbers. We see that the markets can remain range bound. Prices have rallied significantly in the last week and could consolidate this week, possibly at least till the inventory data is out due this week. Markets could consolidate. We also have the monthly outlook reports by the IEA, the International Energy Agency, OPEC also, which will determine the further demand side of things, and that will be the key trigger for oil markets going forward in the coming few days. We see the crude oil prices can consolidate over the next couple of trading sessions, and the range for crude oil prices over the next couple of sessions will be anywhere between 7,300 on the lower side to 7,500 or 7,600 on the upside, but a trade below 7,300 will pull prices back to 7,000 levels very quickly. Internationally, we see that $83 will remain the key support for the markets going forward this week. On the upside, we feel $95 for the NYMEX WTI will be the key hurdle, and markets needs to break that to see more momentum going forward. So I think crude oil can consolidate this week after a big rally last week, and market triggers will be inventory data, of course, US CPI inflation, and along with that we have the FOMC minutes, which will also trigger the markets this week going forward. On the NG side, natural gas prices have started on a weaker front. Over the last few days, we have seen natural gas prices also consolidate, but overall bias still remains on the negative side. Last week we saw a big storage build, and rising output expectation also weighed on sentiments. But we also saw that demand has slowed down significantly because weather remains on the milder side in the US side of things, and that has prompted utilities to inject more into the storage in the US, and that has been the main trigger for the markets last week. And we see this will be a continuing momentum downside for the gas prices going forward. Again, demand will be remaining on the weaker side. Weather remains mild, while inventories are also increased significantly over the last few sessions, and that will be also a key trigger for the markets going forward. So overall, we see more correction for the gas prices, but key supports are at 540, 535 levels, and only a major close below that will pull prices lower. Otherwise, market can continue to consolidate between 530 and 580 in this week. On the bullion side, we saw gold and silver prices giving up most of its gain to end weaker, but again, US employers hired more workers than expected in the month of September. Also, unemployment rate also dropped to 3.5%, which suggests that the Fed can continue its aggressive monetary policy tightening going forward in the month of November and December. 81%, according to a Fed Watch tool, 81% market of the investors believe that there is a chance that Fed will hike by about 75 basis point, and that will be the key trigger for the markets. Markets are slowly factoring that in, and we see if the markets are not able to hold on above 1690, then a correction towards 1650 is most likely going forward for gold. Domestic prices have been supported. Again, the festivities back home has been supporting the markets, but the main trigger for the rupee for the gold prices to move higher is the rupee. The rupee has weakened significantly over the last few sessions, and further weakness of the currency will definitely support the domestic prices. But I think overall it can continue to track the international markets. We see international struggling, so that's why we also see the domestic also struggle. Possibly the range for the domestic gold will be anywhere between 51,000, and on the upside we see 50,000, 52,000 remain the key hurdle for the markets. And the main trigger for the markets will be the US CPI inflation and the FOMC minutes this week for the markets. On the base metals, Chinese investors remained away, as I mentioned earlier, and they have returned to the markets, but copper and aluminum prices continue to struggle, and we see that the strong US jobs number has bolstered expectations that the Fed will stick to its aggressive monetary tightening going forward in November, and that will be the key negative factor for the copper and aluminum. But like the other markets, we see US CPI inflation, FOMC minutes, and the Chinese inflation number along with the trade numbers this week will be the key trigger for the markets for the base metals. And we see more correction, markets can find resistance at higher levels and can resist at higher levels. So we see markets remaining under pressure this week ahead of that inflation numbers from the Chinese side as well. Some stimulus from the Chinese authorities can lift sentiments. We have to wait and watch how that pans out, but the main trigger will be the data going forward this week, and that will be the key trigger for all the base metals prices. So copper range for this week will be anywhere between 630, 625 on the lower side to 655, 660 on the upside of things. Finally, on the currency side, as I mentioned, rupee tumbled last week and did start indeed on the weaker front. The rupee opened at new lows at 82.63, but RBI's intervention capped further losses for the currency. But we see that the rupee will continue to weaken further. We see that the dollar will continue to move higher as strong jobs numbers will keep the Fed on an aggressive policy path this year. Along with that, we see that the elevated crude oil prices and higher bond yields will also dent sentiments domestically. So we see that the rupee will continue its weakness going forward. The key resistance for the spot pair now is anywhere between 83 to 83.15 on the upside, and only a break above that will push the pair towards new lows. Otherwise, we can see consolidation this week. And like the commodity markets, we see the currency will also track the data front, data points this week. We have the domestic inflation as well. We have the domestic IIP number along with the RBI monetary policy minutes. And apart from that, we have the FOMC and the CPI inflation from the US. So pretty busy calendar week, and the Fed speakers will also be highlighted today. And if they continue to reiterate a hawkish stance, then we don't see the rupee appreciating significantly. Of course, RBI has been tackling the current depreciation. It has been aggressively intervening in the markets. Data from RBI has shown that FX reserve has fallen significantly, but rupee still continues to struggle, and possibly we see that the aggressive policy stance by Fed and further gains in the US bond yields and dollar will continue to trigger the markets domestically as well. Some hope can come in the form of RBI hiking rates as well to keep with pace of the Fed hikes. So that can lend some support, but overall we do see the rupee struggle against the dollar going forward, at least going forward, not this week, maybe after a couple of weeks we see continued weak momentum for the currency as well. This week we see the rupee remain within 81.50, 82 on the lower side to 83.15 on the upside of things for the pair. On the dollar side, we see 110, 111 will key supports, and on the upside we see 115 a key resistance for the dollar index going forward, and a break above 115 will definitely push the index towards 120 levels. So that's it from our side. Thank you for listening. Have a pleasant day. Thank you.